May 6, 2014 current time is 10:55 GMT. Jay Meisler here with the Daily Forex Trading Outlook. The markets have finally broken out of its doldrums, I guess. Yesterday we had a 22 pip range in the euro, and today it is one of those rare days when the dollar is moving in the same direction. Why all of a sudden? Looks like the lingering dollar longs of throwing in the towel and giving up. And after almost a month of closing with a 138 handle, Eurodollar looks set to close the 139 handle. But dollar weakness is evident just about everywhere. Sterling is heading, it looks like it wants to head for 170 and the euro for 140, but the euro has a big obstacle ahead of it. So let's look at the charts. One thing I'll say is that the reaction to news is telling more than the news itself. It's an old adage, but it worked. Dollar failed to benefit from strong economic news over the last couple of days, while euro and sterling both benefited from positive economic news today. So why fight the tape? See what happens. Euro dollar still has to get through a key level, while the pound has a big obstacle at 170. So looking at the chart here in the euro dollar, we broke this 139.05 level. Let me get to it in a second. And we have, here we are, 139.05, 139.67 is the key level. And we'll discuss the ramifications of a firm euro ahead of the ECB in a second. If you go to the 4-hour chart, we check out here the 139.05 level, and now in the 1-hour chart, this extended congestion here and then we broke out. So look, here are your key levels in the euro dollar today. Support comes in at 138.85 to 139.05. As long as it stays above 139.05, market will buy on dips. It's got an obstacle at 139.50, which is more psychological than anything else, ahead of that 139.67 level. I said we have general dollar weakness here, so it's not just the euro moving up, and that poses a problem for the ECB. And what is that problem? Is that they've threatened to ease monetary policy if the euro gets too strong, and the assumption in the market's been that 140 might be too strong for it. But if it comes in the backdrop of general dollar weakness, there may be nothing they can do about it. From everything I've read today, people are now saying euro dollar has a Teflon coating and it's going up no matter what. Well, we will see. But in the meantime, here are your parameters: 138.85 on the downside, 139.50 to 67 on the upside. Stops are probably closer to the up than the down. Makes that more vulnerable. Whether it can get through 139.67 will tell the tale. I said the strongest one is 170. Key event risk will be tomorrow when Yellen speaks. If she continues to be dovish, market will have an excuse to sell dollars if it wants to. But then you got the ECB meeting on Thursday, and more threats, but probably no action. With more likely speculation building of June would be the date if the euro does continue to move up. So as I said, we have big obstacles here: 139.67, 140, and in sterling 170, where 169.50 is probably going to set its tone if it stays between 169 and 170. Now, yesterday I posted a link at the bottom of this chart to a bullish dollar call, a bullish euro dollar call from Max McCaig, and he's turned out to be dead on. I updated his latest forecast, and I think it's worth reading because he's won the. When we're all sitting there twiddling our thumbs yesterday, he's been bullish on the euro. Called it right on Friday, called it right yesterday, and I'll see what he has in store today. So I would suggest you can get free access to his service. It's a special. Just click on this link below and take a look. Okay. Otherwise, good luck and good trading. That's a key event risk tomorrow with Yellen, and then ECB and the Bank of England on Thursday.